Let me welcome you all from Sundaram Mutual Fund, Invesco Mutual Fund, Motilal Oswal Asset Management, and 361 Asset and Max Life Insurance. Anybody else? Yeah, let's start. Kotak Equities, of course, who has organized this meeting. Thank you. Thanks to all of you for reposing faith in the company. I think now it's behind us. We need to focus more on the growth of the company, and it's the new products, new set of investors, or new types of contracts. Okay, is something that we are looking at it. I'll open the discussion. You can raise any question that I will answer. Please go ahead. Anyone of you. Please start from there. You are nothing. Okay. Nothing but. Okay. Next.
Sir, if I may.
Yeah.
Sir, on the new products, like you said, if you can give some layerings where we are with each product, availability in the part or core, how long will it take for us to launch those products? What is the market size of this? Maybe the opportunity, so on and so
Okay. See, one is that there's a new set of products, the products which are existing, and then deepening those products. These are the two types we are looking at it. The new set of products, yes, steel rebars we already got an approval, and because of this, this transition, we kept it on hold. So probably the permission may be about to expire or whatever it is, but it will get renewed. It's only a matter of time. And so we have also written to the regulators, requesting them that we will now go ahead and launch it. The steel rebars is why we have chosen. There is a steel ingots also earlier you had, maybe it is in the other exchanges. And there are, if you look at the steel industry, there are so many value chain products. Okay, but we have chosen only steel rebars because there is a wider participation. The more you go up the value chain, there may be very few participants. Maybe liquidity is difficult to build that kind of product. And as you go downstream, probably more and more participants will be there. That's one approach that we have had for this. So keeping that in view, the steel rebars is what we are choosing. And again, the steel rebars, what is that we are choosing is the one which is being used for the construction industry, be that infrastructure or other buildings, maybe big builders, they will choose it. Second, this is one part of it. Second, there are also many small and medium scale industries are there. So from the supply side also, there will be good number of players, just not SAIL or maybe the SAIL group of companies or some Jindal Steel. No, not only those companies. There are many other medium and small scale industries who produce this, subject to the compliance with the ISO standard. The rebar is supposed to be compliant with the ISO standard, which is, I don't exactly know the number, but then ISO standard. Why we choose this? Because when we want to admit them, we should be sure of the quality that they are manufacturing and that the kind of material, because we are giving a platform, we are assuring the buyer that this is the quality it gets generated. So we propose to go with the what you call the military engineering or railways. They have an empaneled list of producers from whom they buy it. So that to that extent, our credibility of the platform will increase. And gradually, we will start the empanelment process as we did in the case of lead. Okay. So we want to support the small scale industries and small and medium, but at the same time, we need to have a phased approach. That is the reason why we have chosen this, and this is how we will be penetrating into the market. Second most important, or the third most important, the spot markets are very, I would say opaque, okay, and they are not organized. Maybe I would say they are organized in a different sense of the term, that they don't permit any new entrants to come in and maybe break that monopoly or lobbying that is happening, etc., etc. I remember when some other exchange launched these steel rebar, not rebar, the steel, what you call, rebar, no, ingots contract, okay. And there is a resistance, and some of these local associations written to the regulator and other things complaining that there is no price discovery, whatnot, all kinds of allegations. For me, as an exchange, probably we may be playing a spoil sport where we are destroying monopolies or we are destabilizing what you call people who control the prices. Why I am saying this is, it happened in other metals where people want to charge brand premium because they are so and so. Why brand premium has become important? Because everybody don't trust whosoever is manufacturing. Because of this brand, because of that name, reputation, they are buying it. By doing it on the empanelment on the exchange platform, even if he is a small vendor, if he is able to deliver the quality of the product that we are guaranteeing it, then he should command the same price as anybody bigger ones are commanding it. Okay, that is the purpose with which this entire exercise we are doing it. So, my personal view is there is a great growth potential for the steel rebar contract. In addition to that, we are looking at again electricity futures contract. Although it is tantalizing in the sense, we get every day, okay, we should get this quarter, we should get this, in this year, but it's not happening. And hopefully this time we expect it to happen. Let us see, because as the climate change is very uncertain and it's happening rapidly, I'm sure demand for more and more electricity will come. Okay.
But you already have an IEX.
So IEX is for spot,
Right.
not for futures. Okay. So you can't lock your price on IEX. And that is day ahead market,
Right.
mostly. Okay.
Term and day ahead.
Term and day ahead. Maybe 15 days or something.
An RTM.
Nothing more.
Yeah. I see.
Okay. So
So you will be doing 1 month, 2 month, 3 month contract.
that's right. That's right.
So why was it getting delayed? Because of your tech transition or something else?
No, there are other exchanges also may have applied it, but as such, a decision has to be taken jointly by SEBI and CERC, and that has not come as yet, and nothing else. Okay. So this is another area of new product that we are looking at it.
Sorry to interrupt, but on the steel bar side, can we actually largest copper or it will be
See, I can't give any numbers and other things, but the point is, we are making an effort. Our intention, our effort will be to sensitize the ecosystem, build the ecosystem, so that they will take an opportunity to trade on the exchange platform. Volatility has to come in the prices, then only the things will start moving, picking up. Okay? And even if I keep everything ready, but if there is no volatility, or if there are some, what you call, long-term contracts, kind of thing, so things may not move. Okay? Like in electricity, some of them are PP, purchase agreement, long-term agreements. But how much is the long-term agreement? Can they also, notwithstanding the long-term agreement, still they can hedge their costs? Because that long-term agreements are also pegged to some pricing. Okay? So that is not hedged, that pricing. So they can still hedge on the exchange platform and then secure their this one interest. So this is
But on electricity, sir, typically, if you see the 3 months, 6 months, Rajesh, that market is bilateral. If you see today, you have your PTC India who does a lot of those bilateral contracts for the discom. And essentially the demand is very short-term oriented. And your vagaries of the climate also makes the market short-term, which is why IEX is very, very active in the today, tomorrow and 11-day contract. So, the visibility on how much business that you can get in 1 month, 2 months, 3 months is something which is very uncertain there. So while you may launch the contract, but I'm not sure how much business momentum you'll be able to get over there.
okay.
There are practical difficulties of operating as a market. Simple EM.
See, we are not. It's not going to be a delivery-based contract. It's a cash settle contract. Yes. Okay. Now, if you look at how the prices have moved over the months, then somebody who has even if they have what you call an agreement with somebody, but that agreement is also linked to the spot prices or maybe 6 months spot prices or something of that kind. And we have seen it. Some of them are linked with the coal prices. Some of them are linked with the with the what you call I'm not able to recall that term. Okay.
Sure.
Now, what I want to tell you is there are many private parties who want to sell their coal, the power also on the exchange.
Yes.
Okay, they are also not able to sell it. So, keeping these things in view, my personal view is it should work. It should work. It should work.
So on your call, you talked about the existing products which you have. There are issues in terms of margin being more than for the, suppose you take offsetting contracts, then also the margin is full. Then you have smaller, basically duration contracts which are not there. You talked about in your call that you will talk about that also. You basically would try to talk to the regulator about that also in terms of after the transition. So what is the status over there? Because that's a, suppose you take offsetting contract, 80% margin is there. So is there a leeway over there or something of that sort? On the existing contract I'm talking about, crude oil or gold or natural gas, wherever.
Okay, currently on crude oil about 40+% is the margin. You have it on natural gas about 30+. Okay, internationally it is much less. Okay, maybe less than 10% or 10% or so. Now the problem is if we reduce the margin, okay, to increase this one, the stress test results will show that minimum required capital, which is called in the name of SGF, goes up. So that deficit in that SGF has to be funded by me. Okay, CCL and MCX. Now that means we have to dip into our reserves and put that money.
I'm not talking about that actually. I'm talking about, suppose
SOM you are talking about, that is a short option.
I take two opposite side contracts on the same side, on the same thing, then also the margin is full.
So that is with regard to the SOM, that is in the options contract it is happening. They are asking for that part of it. So we have already represented to SEBI. In equities they have given, I think 25% is the margin they charge, whereas in the case of here 75% is charged. That is the
Here we are charging full, I suppose.
75% is what I understand, not full. How much?
Okay, anyways,
But what I mean, we want to bring it on par with the equities.
yeah, so is that
But no, appreciate one point. The approach that SEBI is taking here, you don't pick up and then choose what is less, less stringent in equities, and then say you implement here. There is another margin. There is another measure which is about 6 as against 3 here. Okay, what was that? The judge score or some other score? I don't exactly remember that. It is more there, less here. Then let us make that equal also. Then is that okay with you? Then our people say no, it's not equal. But we represented to them, if you go by the risk that is brought by the members to the exchange, or a product is bringing it to the exchange. Apart from, you are talking about the SOM, but other than that, we have many other suggestions which you have given. For example, for calculating the stress test results, you take a 10-year window in equities, whereas in commodities we take 15 years. Okay, that means the high and low prices are also impacting that. So that we wanted it to be less. And the other part of it is members don't contribute anything here. The SEBI regulations say you may collect 25% more also from members who are bringing risk to the exchange. Currently we are not doing it because the SEBI said you may. That means there will be a regulatory arbitrage. We take it and others don't take it, we will have a problem. If they make it mandatory, every member has to contribute 25% of the FGF requirement. So whosoever has got a higher open interest on the exchange, they will bring it more. And they will take it back also when it is reduced. So that is not a dispensation which we have asked for. That has not happened. So that is another one. So, but this SOM alone is not the reason for doing it. My view is, if you have a short tenure options contract, okay, or serial contract, then it will also address, volume will increase.
Short option also is, short tenure also is in regulatory purview, right?
It is the regulators have to approve it. When I say weekly or fortnightly, it is not a contract itself is for a week. It will be for a month. It will be serial. That is 5th of the previous month to 5th of this month and 15th of previous month to like that. But if you have 4 contracts overlapping each other, then every contract will expire once in a week. Then you will have a lot of.
Essentially, it's basically more number of contracts actually.
That's right.
That also is not approved, right?
No, but we have to now we will approve. We will approach them. Okay.
This is slightly innovative. What you're trying to do, having more number of expiry days by not having weekly, but monthly.
Serial contracts are there in other markets.
No, in India.
In India, we don't have that. Yes.
So, sir, have you consulted the regulator, and you think it is a possible?
No, we have already discussed internally and with our product advisory committees also. This is something which they have been recommending. We must do that. I'm sure it will help us.
So one question was on this gold thing. So now crude, we have a playbook. Clearly options have done well, and perhaps the reason has been that the margin went up in futures, which has been a blessing in disguise. It helped your options, and options is where the large part of the liquidity is there. And the other advantage that you have is cash settled in crude. When it comes to gold, do you think can you replicate this playbook there? Is there a possibility for you to increase margin in futures, or it's a set rule and you increase margin? So I'm just trying to understand the playbook which helps.
You are saying to push the people to go to the options because it is more. I don't think it will happen that way. It's a plain, we can't play the same conversion rule in here. The reason being is the contract of gold, 1 kg contract is costing you about 60 lakhs. Okay. On 60 lakhs, it's a bi-monthly contract. The premium on options will be high.
But you also have mini, you are launching fetter also.
No, we have it. But then on that, for us to launch the option contract, you need underlying futures turnover to be certain limit. Certain level. Then only you can launch options. Okay. So we will be launching, we will be applying for this. That's what I said, deepening in the existing product line also.
So you don't have options on Gold Mini?
We don't have. We don't have, no? Huh? You have options.
Options on Gold Mini.
Mini is 100 grams.
Yes. So there also, and now you are launching Petal also.
Options, no, that is 10 grams is what we propose.
So that will be further lower, so the ticket size can be kind of reduced.
Option on Gold Mini, I am not aware. Is it there?
I'm not sure about it. I have the... By the way, you can download this. Our app is there, MCX app, mobile app.
Gold Mini is the option.
Where you will get all...
There is a Gold Mini product.
No, future में तो है ही है.
Future is there.
Future is there, but
He is asking about options.
So sir, what you are saying is that the Gold Mini futures volume is less, and that's why you are not
You
able to
need
launch.
500 crores or 1,000 crores, something of that kind is the rule. Then you can introduce.
ग्राम से लेकिन
It is there.
हाँ 100 ग्राम वाला है ना.
It is introduced well. Yeah, only this.
Sometime back it was introduced.
I just recently, recently means last year, but not fully. Yeah, it is increasing. Gold Mini, the turnover for in the month of options is 800 crores. So 400 crores is the 4,000 crores is in the main one in October.
In October, what was the total volume in the Gold Mini, sir? Options?
808 average.
Average 800.
808 crores. Daily ADT. This is ADT.
So then the ticket size.
So last month, it is 412. Okay. And in fact, it is 419 in August, September it is 412. But October it is doubled.
That is fine. The number, while it may be improving or whatever, it exists. So the bigger point is that your ticket size gets taken care of.
Reduced, yeah. Ticket size as well as tenure.
So it's a bi-monthly as of now.
No. Mini is monthly.
Mini is monthly.
That's what.
Okay. So sir, then can you have that playbook here in terms of making futures less attractive, making options more attractive?
No. Our turnover fee, margins cannot be the product
formula.
No, it's for a product. It's for the underlying product, not for contract by contract.
So underlying gold itself.
Underlying is gold, but then in Gold Main you can't impose also, no? If you impose Gold Mini just to have that kind of crude oil effect on this gold, but then Gold Main contract will also die.
See, but that itself is not moving much. Say for that much.
No, but
crude
future will.
contract is not doing well.
No. Gold futures will die. You will have a problem.
So, but even your crude futures is not doing great. It's only your crude options which is the largest part of largest driver.
No, I'm saying in Gold Main, you are saying futures is not doing or options are not doing. But I'm saying futures is doing better. In fact, the most of the OI comes from the gold, and if the internationally, our Indian domestic dwellers are not allowed to hedge in international market. As a result, the substantial part of our hedging is from the industry. Okay, substantial, maybe more than 75% or something like that. No, if you start increasing the margin, then complaints will go because we supposed to link it to something.
So the point is that the set formula and you can't tinker.
It's not a formula, but rationale should be there.
So that's what. So while it is doing whatever it is doing, but I'm sure the potential is very big. And while in world and India is different, here the options is the main driver. That is not the case.
I understand.
Even if you let go some of your futures, it can be a technically a.
It's like bird in hand is what two in bush. I will try that and then I will lose here and then I will lose there, then I will have a problem because there is a competition also out waiting. Okay.
With this logic, you would not have got crude options.
No, crude options we have because this is not there. Others were not there anyway when the crude options came in. Others were not there.
Others can you charge different margin for options and future? Because suppose I am selling an option contract.
Optional features is okay, but then I'm saying gold mini will have a different price and gold main will have a different futures contract. You cannot do that.
That will not happen.
That will not. Because if going by the thought that is propagated, then gold main will have only 10%. Gold mini can have a 20% margin so that the people will know. But that cannot.
Sir, hedges are mostly in the futures market anyways, right?
Hedges are mostly in futures. That's right.
So introducing an option, does that really cannibalize the hedgers? That part of the industry.
It will impact, no, if I raise the margins in the futures.
So you're saying the demand will shift to options even from the hedges?
No, I don't think that. I don't say that. But it's not correct. I don't think we have to balance everybody's interest. We have to balance everybody's interest.
And the second thing, what a possibility of cash settlement contract in gold?
That may not come. That may not come. Wherever it is feasible, the regulator would like to have the contracts in this one, what you call delivery based one.
What are you means as per your own opinion? Which means after this, you have said in the call that you are going to focus on business more from after this transition. So whatever your existing contracts are, which is the product you are most bullish on, means most positive on, that this will do well, you want to tinker most or want to introduce new, means which are the things on the existing ones? I'm not talking of the new ones.
I know.
Nobody
See,
knows
copper, we have applied copper for mini, and that is something which we are looking at it, copper mini. And nickel also, it is completely died down. We were doing about 4,000 crores ADT, and now we have asked them nickel mini. Okay. Almost 40 lakhs is the contract.
What is the current full size of copper?
2.5 tons.
2.5 tons.
One lot.
One lot, right?
That is the way it comes delivery. So it can't be lower than that.
So that you are applying for mini. Mini will be what size, sir?
Mini will be earlier 500 grams. 500 kgs.
500 kgs.
Half a ton.
So that you are means basically you are saying that will do well.
That is one, and then nickel is another one. Nickel also smaller one, lot. We had earlier 250 kgs.
And no amount of innovation in say gold is possible apart from the serial contract.
We are also planning to introduce I think we have applied also to 10 grams also. We have a gold guinea 8 grams.
Yeah.
So 10 grams.
Petal is right.
Petal is 1 gram.
Achha. That also you are launching.
Gold guinea is 8 grams.
Petal also you are launching, right?
Petal is already there. Petal we have
Options.
That will be petal.
No, not option.
Volume nahi apna.
Where is that?
But I think on the call you said petal also. Some new launches related to petal.
Gold
new
petal.
launch.
No. Petal is already there. Okay. 10 grams is what we were doing. Gold 10 grams.
That you call Guinea.
Gold guinea is 8 grams.
Achha.
Yeah.
10
Gold.
grams is mini, that is also there.
No. Mini is 100 grams.
Sorry.
Gold mini is 100 grams.
Correct.
So there will be again means suppose volumes take off in that 10 gram option, then there will be option contract on that also, because then you will
If
require
underlying features increase, then we will launch.
you will launch.
Everywhere. Wherever there is a feasibility, wherever we are meeting a regulatory compliance requirement, we will launch.
And sir, where are we in that journey of spot exchange and index products?
Spot exchange for coal? Or talking about what for?
Yeah, gold.
No, gold spot exchange, that is again stuck in the GST. Okay. Those issues until they are sorted out, it will not take up. Because the first guy who is depositing gold, he needs, credit back.
Yeah.
And he will not get it until once it is converted into EDR. And EDRs are not subject to GST. So nobody will pay. And the last guy who is converting the TDR will only pay.
So 3% will become the cost for the person, first person?
For the first person, but if it is paid back, then there is no problem.
It will never be paid back, no? Because
No, only at the end when it is taken out, it will be paid. But he cannot wait till now, no? It may take 2 years, 1 year. How will it be? So they have to address it.
Possibility of some relaxation there.
Some discussions are taking place, nothing happened. That's why both exchanges have launched, the big brothers. But then nothing happened.
They have launched
Spot exchange.
Spot exchange launch है उनका.
because GST is a problem.
Because of GST is a problem, nothing happened.
But if all of them try to kind of lobby for this requirement, then it should not be that MCX is.
No. They are trying, but then, we have tried for a different model also. We do have a problem. It's not just there. But we have a different problem, GST issues. So we have been, reproaching the government and, requesting them to reconsider the way that it is charged.
Sure.
We are not asking for any concession, not even a single rupee concession. The way it is administered is important.
And sir, in terms of the index, any index that you're thinking of?
Index products is become a big challenge for us. The reason is, again, the disruption has caused this. Nickel, earlier we were talking about 300 crores ADT in the metal contracts almost all, okay, metal indices, or metal dex. And thanks to nickel, then everything went haywire. And we had to reconstitute the nickel index, and metal dex rather. And we removed the nickel from that, and then only 4 metals are now there. And that is to be relaunched in a sense. So that is not done as yet. Okay, we will do that. And basically, unlike your equity market, this index is a written index because already price is embedded in the this one when derivatives traded price is embedded. What you get is the return from near month to next month and third month. That is the only thing that is reflecting. Okay, nothing else. So that is the challenge we are facing at this point in time. That is why index products is difficult to get them unless there is an arbitrage opportunity between the index and the underlying contract.
We are also looking at having a DMA option. Right, we are working on that. Right.
DMA, we should be able to do that. That is one thing we are planning to launch. And in fact, it is there in the existing system. We tested and everything is there in place. We will announce to the market.
So, sir, but how does it help in deepening the market? Right? Because there are some FIs who are looking at it.
So FIs want to come through via DMA.
Right.
So that is why if we launch it, then they will join.
But any idea how what would be the impact of DMA in terms of volume? You would have done that study, right?
No. You see, DMA is one of the tools that are needed for them to participate. So we have built it from day one because that's there in equity market.
Right.
Okay. So we have not done any cost benefit analysis. What is that extra will cost me if I provide this service, and then nothing of that kind.
But FIs have got better commodity exchanges outside India, so we should not expect much out of it, right?
I don't see that view to be, holding good all the time. Okay. The reason being is that prices all the time need not move the way that internationally it is moving. There is always an arbitrage opportunity for that. Point number 1. Okay. Number 2, that your prices are rupee denominated, whereas the international is dollar denominated.
SBI would like dollar.
No, but then those who are trading in India, they can take advantage of that. Okay. Third, there is a calendar spread contracts. There will be a calendar spread also. Okay. Although, some of the contracts may be listed in other markets, but the calendar spread may be different here, and they can take advantage of it.
So, sir, then why AIF CAT-free funds that was also allowed few years back, it did not take off? This all benefits, even they would have got it. What do you think in your assessment why that segment did not take off?
No, you're absolutely right. We have been, approaching them. There are so many limits on that. Okay? Much like mutual fund. Now, mutual funds cannot hold other than gold. Even gold also earlier they had only 30 days they can hold it. That has been relaxed it to 180 days if I am not mistaken. Now what about other metals? Metals is 30 days. Your contract itself will take more than 30 days for that metal to go out of your books. And if somebody is holding a calendar spread contract, he will buy it this month, he will sell it only in the 4 month, then he has to hold necessarily for 2 months, 3 months, 4 months, whatever it is. So how will it that work for them? So the design of the regulation itself is prohibiting them to participate. And that's true for others also.
Sir, and this over the serial contract that you're talking about, what is the timeline that you're expecting that can go live?
It will take time. It will take time. Okay. Because one is that SEBI has to first approve it, regulators have to approve it, and then thereafter we will work on it. But we have to build that in the system also, we have to make some changes. Okay. At least we will keep it ready in the next 6 months time in the system now.
Take at least a year.
We can predict, but then, I don't want to get...
You already had some kind of experience in the past. So.
That is the reason.
And steel rebars means what will be there also there's some timeline?
Steel rebars, we see the day we get a permission, we will take about 3 months to actually activate that contract, because you need to tie up with the warehouses, you need to do little more,
There you will require certification also, means that will be a footwork. You will be certifying the vendors, right?
No, we will not be doing that. As I said, that's why those who are empaneled by so and so will be first, they will be permitted, and thereafter we will start this empanelment process. To begin with, we will go by that.
We'll begin with which we'll go with the approved vendors of railways and all.
Our railways and MES, Military Engineering Service, and National Building Construction, they all have some panels.
Sir, in your assessment, what has led to this increase in crude options volume? As you, in hindsight, what do you think has worked?
See, what I'm thinking is, definitely the margins in the underlying has pushed them to go for this, no doubt about it. The second important thing is that the volatility in the last this whatever 1 or 2 years is been higher than what it was in the past. Okay, it was in the past. That is the reason why it is.
Even cash settlement helps.
Of course it does. For that matter, for any product, cash settlement is an incentive. No doubt about it. Because GST, whether, you end up getting a registration means then you may get delivery in Delhi, delivery in Calcutta, then you need to have registrations at all 4 places. Why at all as a financial player, why at all you will take all these registrations and then end up filing returns and all that, if you are not interested?
This rapid rise in this digital brokers, discount brokers, that has also made the ecosystem favorable for you. Do you think that is also helping?
Well, it did help, no doubt about it. But the point is, the number of active investors who are participating is not represented by the number that they upload on the exchange. Okay. So when you register with a ABC member, he will say that it is for equities, currency, commodity, whatnot, and you may be signing it like that. And maybe our number may be 1.5 crores or something like that. But then the number is about 6.25 lakhs or something of that kind, isn't it? That is what it is. The number of unique investors who are trading it. And minis will definitely help us more.
Sorry, what minis you are talking about?
Mini contracts will help to bring in more and more investors.
They are already there.
Only in some, no? Not all everywhere, no?
I I thought gold is the biggest,
No, metals also we are looking at.
historically, the potential that gold has, like no other metal can match.
This is the one. That's what. But that is I know that, but corresponding is this. I know, that's what I said.
So the point is that historically, the potential that gold has, what we saw in 1213, no other metal can match with that kind of potential. So the point is that if gold is not moving up meaningfully, then to expect other metals to contribute, wouldn't that be a little far-fetched?
In fact, the, I mean, uh, gold for retail participation is fine, but basic distinction that we have to make equity versus risk market is, this is a hedging. It's based primarily for hedging, that is for investment. Okay. There are so many investors and why not here? I will have no answer because it's not for us to define or convert this market into a smaller place and then smaller lots and then say that everybody should come and then trade. No, that's not. That's not at all the intent. But in the case of metals and other things, I am looking forward to have more and more SMEs to play a greater role in this. That is what our focus is going to be. If you see in metals, our open interest has increased. I don't know whether you noticed it or not. The open interest is very critical for for other players to provide liquidity. Okay. We have been engaging with some of the organizations which are working with SMEs, so that they need a structure where they can participate without fully knowing the nuances of the hedging. Many may not be knowing it. During the COVID period, many units have been shut down only because of the price volatility. Okay. That's what the interactions with others, industry associations and others is because of this. So we are also trying to figure out how do we help them to come through some kind of a structure which will help them to hedge. Simultaneously, they in turn hedge on the exchange platform on their behalf. Okay, and not to worry about on a daily margins and all that kind of thing. And when we have interacted with one big hedger, in fact they said, I am not interested in a daily basis, take payout, pay in, they I will give a 100 crores, 50 crores, whatever it is, bank guarantee. Let the broker manage all my issues. But then that doesn't work here. So there is a representation also we have made to the government, I mean SEBI, on this kind of thing, where the investors will be able to, big players will be able to give a kind of margin in the form of bank guarantee and other things. And then they should be able to not to worry about on a day-to-day basis, payment of what you call M2M and etc. Maybe broker can arrange with the help of some financer or with the bank, where that bridge loan or whatever you call it, they will give it and then accommodate them.
So internally, have you done any classification between what percentage are hedgers, speculators, or corporate retail? Any internal?
If it is not in the public domain, I will not be, but then we have already done it. We will know that. But it varies from product to product.
Yeah.
Varies from product to product. Huh? Come again? But this is in the public domain or not?
Yeah.
This is different. This is on the website we are displaying it, how many hedgers are participating. Because we're supposed to be displaying that. But only that information we have it. But then percentage-wise, we are not bifurcated.
Interoperability, assuming that the margin trading BSE can
See, currently, brokers have to physically take out that margin from that exchange and then deposit here, then only we will give a credit. But there is a, what you call a discussion where the members association, brokers association is asking that they should be able to, without shifting physically the margin from whichever exchange that it is deposited, if the other exchange requirements are met, they should be able to trade on the MCX also or any other exchange or vice versa. If the other exchange confirms, yes, I am blocking so much money for this exchange, and then they can trade on the other exchange. And confirmation to that.
How practical is that?
It is practical. It is practical. But it has to be implemented. Because after 3:30 equity markets are closed. And brokers would like to use that surplus that they have in the other exchange. And I think that is something, that idea should work.
Is the regulator receptive about that? Because we are talking about that for a long time. In fact.
Industry association is taken up actively with that. It should work.
But have they been receptive, the regulators?
Of course they are. They are. They are looking at pros and cons of it. Absolutely. Yes, the gentleman wants to do.
Yeah. Sir, just continuing on that, you mentioned about that 500 to 1,000 crore kind of a number, when the turnover reaches where you can, you typically regulator. So how does that work? If you can just elaborate.
Come again.
When the futures turnover crosses a particular monthly threshold of 500,000 crore in terms of liquid volumes, right? That's when you launch options, right? So just wanted to understand that.
This 1,000 crores is a requirement for non-agri commodities,
Okay.
and the average daily turnover over a year has to be 1,000 crores. It's not a particular day. Okay. For agri commodities, it is 100 crores. 200 agri commodities.
So second, continuing the question on that, crude oil, option, the rise in crude oil option. So we see it's coinciding with a lot of, algo trading, happening, and bulk participation comes from there. So how sustainable do you think this would be in your opinion?
It is sustainable. In fact, some more players are waiting to join because they didn't join because our technology platform is in transition. Some of the big players have taken membership. Okay. And they are trading through some, some member or something like that. But then full-fledged they have not started. They will be starting. It is, interest is growing, not, decreasing.
But ultimately it depends on the volatility, right? The volatility.
Of course, that is true for Sensex or Nifty and everything.
But there is a volatility history in Sensex and Nifty for a long time. In crude, it started like 2-3 years back. This kind of volatility. This kind of volatility was not there on crude. So ultimately, it depends on that thing. Yeah.
So I said that I acknowledge that volatility is important.
Yes. On the cost side, now that we are sitting down, so what can be this? You said we will go into our earlier
See, there is no link. It's not linked to the turnover.
right.
So as far as the technology transfer concerned, that's what the point we have made. And because of this depreciation and other, okay, there will be for the next 4 years, it will be, of the existing order. That's what is mentioned also. Thereafter, it should taper off.
So for this 63 moons, you will be paying till this quarter, right, sir?
Come again?
For 63 moons, you will be paying till this quarter, right? That is the contractual, right?
Yeah.
March quarter is the first quarter when you will be on the financially you will be on the new software, right?
Yeah.
This quarter also partly. There will be some charge in this quarter because we have gone live from 60. So there is some OPEX to come.
OPEX or means depreciation charge?
Both OPEX plus depreciation.
You have actually in this quarter also for that one line item computer or something there you have taken some expense, right?
Yeah.
That is about the laptops and other things.
Yeah.
That is
That's a one time.
Anything 1 lakh and below, we write it off the same quarter.
One time.
That's a one time thing, right? So in a steady state basis, whatever number you have capitalized for the PCS software, so depreciation on that will be the expense item from FY25 onwards.
From this quarter on.
From this quarter it is because you have now
Gone live from 16.
okay. So that will in this quarter you will have the depreciation amount on that plus whatever you are going to pay for 63 months. Both these things will be there
That's the operating expenses for the new.
for the new platform. So in a steady
From next year, from October 24, then the AMC to TCS will kick in. It's 1 year warranty.
we are just I am just trying to understand in the steady state FY25 what are the expense items which will be there for the new software? One is depreciation, other is the OPEX for that software, right?
In the middle of the year.
From October
Second half.
24, the AMC will
AMC, there will be 3 line items for the software, right? Which will be the cost for you for MCX. What will be the largest cost portion means the OPEX or the depreciation? Pardon me?
depreciation.
Depreciation will be the largest.
Okay. Anything else?
I have one.
Yes.
Like, what are the operational challenges with like the gold hedging being maximized? Because I understand it's supposed to happen, but the numbers don't reflect that the hedging is at. There's too many entities for the number to not be a higher number. So what are those?
I didn't get you. Please.
Gold hedging has to be on our exchanges, right? So that number doesn't reflect the gold tonnage in India. So like, why is that open interest so low for gold?
Okay. Look, in a year if you consume 800 metric tons of gold, 800 metric tons will not be reflected. What is in trade is what, I mean, if it is consumed then it moves out of their books.
But do you think the number is like a
So,
genuine?
it's about
reflection?
15 metric tons is there, and at what times we see 30 metric tons on the exchange platform. Whether everybody does hedging or not, that is a challenge. That's what I'm saying, 15.97 metric tons. It is as of now. That is there on the website also. So, so 16 metric tons is hedged, and all big players hedge. And we have impressed upon the RBI and many others also wrote that the banks should insist whenever they are extending loans on commodities and etc. They should insist that they should hedge their commodity risk. Otherwise, it will backfire on them also when things go wrong. I mean, that is something which is very important. We have been engaging with IBA and banks to enforce this. Because they had given advisory in the case of agricultural commodities, but not for this.
But sir, it's also true that all these 800 metric tons of gold is imported.
No.
So these guys would be basically hedging it on global exchanges.
No, they are not allowed. They are not allowed. What I'm saying, if it is once it is consumed, as a consumer I buy it out, then it will not be there.
No, that is true. That is true. But anyway, that gold doesn't trade anywhere.
No, no.
I'm a consumer. I consume 800 tons of gold.
I'll tell you. Let us say there is a 10 metric tons from Titan. Okay. What is there in the inventory in the shops? Now, the moment it is taken out, then 10 metric tons will be a constantly, something made should be coming something. So they have to hedge only 10 in 10 metric tons. But in a year, they must be selling 100 metric tons. That's the point I'm making.
No, but at 10 metric tons, they wouldn't be hedging it on global exchanges?
No. They are not allowed. They are all are allowed, none of them are allowed to hedge. They are doing it, let me tell you. Repeat, major players in the country are hedging on LCA. There is no doubt about it. Anything else? Done? Yes, Sabjit, is that okay?
Yeah,
It done?
yes, please.
Okay. Thank you. Thanks to all of you. Thank you so much. All the best.
Okay.